Guys, we will start at 8:05. So have patience, please.
And MD, what is this website? This is SEC government website. What?
Uh, this is a document which is given by them.
Hey, hello everyone.
Yeah. So hey guys, welcome back to TradFi and Bitcoin Club. So today we will be discussing about pack meet sets. So there's a special purpose acquisition company which is going to be set up by Tether, by Bitfinex, by SoftBank, and CEP, Cantor Equity Partners. So these four big guys coming together to form a SPAC, and the CEO of this company will be Jack Mollers. He's also um, Bitcoin Maxi, and he's the CEO of Strike. It's a Lightning wallet, if I'm not wrong. So yeah, so we are going to deep dive into what is this project. They have named this project as Project Mystery. So let's start. Project Mystery investor presentation. So the SPAC after successful, if the SPAC goes successful, the name would be 21 Capital. So let's like before going into 21 Capital, let me introduce you about SPAC. So SPAC is basically special purpose acquisition company. So how it's like what's the structure and how it happens? It's basically a shell company formed to raise capital to acquire an existing company, which stands for special purpose acquisition company. So in our case, I think CEP, Cantor Equity Partners, will be the company which is going to get acquired. So yeah, in the last couple of days, it's running it's running like crazy. Like before announcement, it was around $10.62, and now it's trading around $31.24. So yeah, but I mean the history of SPAC is some grayish history. I mean, there were some bad things which happened with SPAC. Like if you guys remember, before Byju's was going to get bankrupt, they were trying to raise. I think I'm not sure, but they were doing something around SPAC. Like they wanted to list in the US and take Byju's public, but unfortunately that couldn't happen. And yeah, you know the history. So generally, SPACs are announced at scale, but few like most of them get liquidated and very few of them gets completed. So the history of SPAC is like a scam. So one of my friend Fineng, I think today is not here, but he mentioned something in TradFi and Bitcoin channel. Like SPAC is generally a scam. But let's hope that this time this doesn't convert into a scam and maybe flourishes because they are investing in Bitcoin. So, what are the process of SPAC for like process of SPACs?
Hello.
First,
Hi,
yeah,
I'm there.
yeah,
Yeah, hi, sorry. So, you mentioned that SPAC is mostly they are scams, like there has been history of scams in SPACs. So, do you recall any example of which SPACs were issued and they collapsed or they were scammed?
yeah. Here they have given some examples like SPACs poor historical performance. Just a minute, I saw real world example. So Richard Branson's Virgin Galactic was a high-profile deal involving special purpose acquisition companies, venture capitalists like Chamath Palihapitiya. So Virgin Galactic is now bankrupt. So there are few examples. Another example is Bill Ackman, founder of Pershing Square Capital Management, sponsored his own, which became a largest ever SPAC per Pershing Square Tontine Holdings, which raised $4 billion in offering. But the most famous foray into SPAC is that of Trump Media and Technology. So these are a couple of examples which I mean turned into scams. So
Okay, fine.
yeah. So I was here explaining about SPAC. So firstly, as I was like this, this is an investor presentation. Like currently, it's not formed, but we are in this space. Like SPAC formation is going on. Then SPAC IPO happens. The SPAC goes public, and any funds raised are placed in a trust. Then there's a trading period in which the funds raised they look like what to do of these funds. Basically, a SPAC is like a blank check. So investors give the management a blank check, and we can do anything with that blank check. Like we can buy any company or anything. Management can do anything with that blank check amount. So there's a trading period. The SPAC shares begin trading on a stock exchange while the sponsors search for a suitable target identification. So in our case, CEP will most probably be the target. So let's see what happens in the future. Merger announcements. So if everything goes fine, there's a merger, or you can call it as an acquisition. Pipe financing. So pipe is private investment in public equity. At this stage, additional funds may be raised through pipe. So in this 21 capital structure, we have this pipe financing also. I think, I will show you in a minute. Then proxy statement filing is done, shareholder voting, merger completion, then DSPAC, and then we have our own ticker symbol like XXI in Roman numerals, that is 21. So after SPAC completion happens, the CEP will trade as XXI, the 21 uh, ticker 21 will be shown. Post merger newly public company operates like any other publicly traded entity with former SPAC sponsors often taking board seats or advisory roles. The company must follow all public company regulations, including regular SEC reporting. Lockup period. There's a typically a lockup period wherein sponsor and shareholders can't sell their shares, usually lasting 6 to 12 months. So So let's get into the project mystery. So executive summary. So here we will look into like 21 Capital, 21, or the company's purpose built vehicle for Bitcoin investment. So whatever they are raising, they will essentially put into Bitcoin and run a similar strategy as of MicroStrategy. Like they will become a Bitcoin treasury company, but here they will focus on some more things, like they might try Bitcoin lending and anything related to Bitcoin. Like currently, MicroStrategy or strategy is not focused with like the 500 and something 553,000 Bitcoin which they have currently right now. They are just sitting idle in the balance sheet. Like strategy is not leveraging that Bitcoin. I mean, they are leveraging it, but not directly. So what these 21 guys are planning to do is like they will leverage its Bitcoin to generate returns for its shareholders directly. So 42,000 Bitcoin, which they are planning to raise. So these 42,000, some part will be leveraged, some part will be lent, some part will be, I mean, they will find some ways to generate Bitcoin yield. By the way, Jack Mollers has coined a term BRR, BRR, Bitcoin rate of return. So basically, it's similar to what strategy uses Bitcoin yield. So Bitcoin yield is basically like first you have X number of Bitcoin and then you have X plus something, and this divided by initial Bitcoin holdings. So you get the, I mean, the yield. So BRR is basically the similar metric which strategy uses as Bitcoin yield. So currently, 21 will be majority owned by Tether, the world's largest stablecoin issuer, then Bitfinex with significant minority ownership, and then SoftBank, one of the world's largest leading technology investment companies. So here, as I was discussing Pipe, uh, so in Pipe, they are looking to raise some investment via Pipe also, excluding with these like Tether, Bitfinex, SoftBank. Excluding this, they are trying to raise some public investment, or like 585 million will be raised via Pipe offerings. Like 385 will be convertible debt and 200 million will be equity. So I think this will be open to some retail guys, maybe HNIs. So let's go further. The Bitcoin thesis. So I think as a Bitcoiner, we are. Yeah, okay, sure. Thanks. So as a Bitcoiner, I think we all know uh, what impact Bitcoin is making. Like Bitcoin has limited supply. Institutions and sovereign are adopting Bitcoin like crazy. Superior historical performance, hedge against currency and geopolitical risk. Inflection, why now? Inflection point for adoption. So currently, because of institutional adoption, they are seeing it as a inflection point. Accounting reform. So there was an accounting reform by FASB. So long story short, accounting reform is basically like you can report your Bitcoin holdings at market value, at fair value. So before that, uh, Bitcoin holdings needed to be reported at historical cost, or lower lower cost or historical cost. So, like for example, MicroStrategy started buying Bitcoin in 2020. So, what was the price in 2020? Around 20,000 something dollars. So, before this rule, like strategy has implemented this. Strategy has adopted this rule now in Q1. So, in the Q1 results, we will most probably see the latest, Bitcoin will be valued as fair on a fair value basis. Before that, strategy was valuing it at lower of cost or historical market value. Like Bitcoin was valued at $20,000 price. So yeah, that was the FASB accounting reform. Next is ETF's institutional accessibility. So ETFs has accelerated Bitcoin adoption, first mover and competitive advantage. Early adopters of Bitcoin treasury strategy have announced shareholder returns. So yeah. So this I think we know. So let's go further. I hope this is also known to you guys, like total global asset value. Bitcoin, we have a smaller percentage here of just 1.6 trillion of total global asset value. So we have pretty pretty much larger space to acquire. This is a CAGR given, like what's the growth when you compare with gold, Magnificent Seven, Bitcoin, bonds. So Bitcoin has a high CAGR, like 22% in 3 years and 57% in 5 years. So macro and political conditions recently, as we all know, the Donald Trump government is pro Bitcoin, pro crypto. So yeah, so they will target similar to these companies. Like 21 Capital will be focusing like these companies like Strategy, Mara, Riot, Metaplanet, and Sembler Scientific. So these guys are holding Bitcoins in their balance sheet, and yeah, they will have something similar. Bitcoin's inherent supply constraints. So yeah, as we all know, there is a hard cap of 21 million finite supply, and currently we have only 450 Bitcoin mined daily. So yeah, MSTR's road to becoming Bitcoin holding company. So this is basically a history of how strategy started and how it's going. MSTR capital raising strategy, raising capital to acquire Bitcoin. So 21 Capital is hinting that, yeah, is somebody want to ask a question? I mean, someone has unmuted. Okay, so let's go ahead. So this is a history like MSTR is offering convertible notes. They are issuing at the market shares. So yeah, this is a history like how they acquired um, shares and what were the ways which they used. So yeah, convertible preferred, convertible bonds, ATM offerings. So yeah, these were the investment opportunity overview. So currently, as I introduced you to you earlier, like CEP will get acquired by the fundraising, whatever happens through SPAC. So because of this news, CEP ran like crazy. It gave around 200% returns in few days. So yeah, CEP will get some shares in a newly listed company uh, of I think 21 Capital. They will get around 2.9% if I am not wrong. So what are they planning? They are planning to strategic Bitcoin accumulation with intention to maximizing Bitcoin per share. And BRR. BRR is basically Bitcoin rate of return or Bitcoin yield, which will they try to generate by implementing some strategies as similar to MicroStrategy, Semler Scientific, Riot, Mara, and maybe they try to implement something new, like they go and lend their Bitcoin or find potential pathways to leverage their existing Bitcoin stack. So acquire Bitcoin in a shareholder friendly manner. So this is true to any Bitcoin treasury company. So any Bitcoin treasury company focuses on accretive dilution. Like they focus on number of Bitcoin, like Bitcoin per share is the main key metric which we as Bitcoiners look into this Bitcoin treasury companies. Yeah, maintain an uncomplicated balance sheet, explore potential ways to creatively leverage Bitcoin. So this point says that they will explore some creative ways through which they can leverage Bitcoin, grow rapidly and responsibly, promote global adoption of Bitcoin as a treasury reserve asset, utilize deliberate financing strategy to deliver superior performance for investors. 21's operational business plan. So, like, they are hinting like what will they do in the future. So first step will be Bitcoin accumulation. This will be similar to what MicroStrategy is doing. So in the first step, they will acquire Bitcoin like crazy, and they will issue convertible bonds, or they will issue ATM, they will issue debt and equity securities, they can issue preferred stocks. So the first step will be Bitcoin accumulation, and then the next, I mean, next step, we can't say a next step, but they have one more leg of a Bitcoin. Like they will create license and produce modular education content, branded video media, act as a go-to content partner for major conferences, Web3 firms, and fintech institutions. So this is one of the things which I think strategy and what companies which I have seen like Meta Planet and all, they are not doing it currently. Like they will, which 21 Capital will be doing, like they will be generating some educational content. So this is new. Bitcoin financing. 21 expects to engage in a range of Bitcoin related activities, including Bitcoin related financial and advisory services. So this is one of the business area which they can get into. They can advise uh, to some other businesses or maybe private individuals or HNIs, offering Bitcoin related debt and equity structured products and Bitcoin related lending. So this is so far their business plan in 21 Capital. So 21 strategic advantages. Pure play Bitcoin. So this is a chart wherein they are showing like what is their strategic advantage and why investors should look into investing in them. So pure play Bitcoin exposure. In traditional Bitcoin companies, it's generally not, I mean, there are some pure play like strategy and Metaplanet. Uh, in their, I mean, they have shown strategy here as strategy is not a pure play, but I think strategy is also a pure play because their traditional IT business is less than 1%. of their current market cap. So I think, yeah, I mean, how they are defining it, I don't know. But yeah, if you consider Bitcoin treasury companies like Semler Scientific, they have their pharma business running. Like it's if you consider it's a huge component of their market cap, the pharma business which they have. So yeah, they will 21 Capital will be pure play as compared to Semler Scientific or Mara or Riot. Like you might be confused, like why I'm calling Mara or Riot as a not a pure play Bitcoin exposure. So it's because they are also into AI. They are using their computational power to power AI, and also mining business is not a great business to be in. Like Bitcoin is hard money, and mining of hard money becomes get over time it gets harder. So that's why I mean mining gets harder over time, and due to this, I think they have given this like a quarter portion is to Bitcoin treasury companies. Like they are not a pure play Bitcoin exposure. So use of leverage. 21 Capital will be using leverage. Bitcoin treasury companies also use leverage. Strategic Bitcoin accumulation. So this is same for both overall relative ranking. So this is ranked by them. So consider this as a forward-looking or not a financial advice, and do your own research, because whenever these companies file these disclosures, they try to polish their, I mean, they try to sell themselves to us as investors. So consider, take take this information with a grain of salt. So yeah. So if you consider compare 21 Capital with Bitcoin, uh, pure play Bitcoin exposure, we get it, but we can't use leverage directly with Bitcoin. Strategic Bitcoin accumulation, we don't have that. If you consider with ETFs, same, but in ETFs we have one more risk, like we have a custody risk or counterparty risk with our bitcoins being held by the ETF issuers. So yeah, Bitcoin exposed corporates. So Bitcoin exposed corporates, maybe they are hinting like Tesla. So they have some Bitcoin exposure, but they are not, um, I mean, actively doing some Bitcoin accumulation or something related to Bitcoin. And third is Bitcoin miners. Same for Bitcoin miners. Like use of leverage, they can do, but strategic Bitcoin accumulation, they have started doing, but as I explained, it's hard for them. Now, in this chart, they have compared directly with strategy. So I don't agree with this on a like 100%. But yeah, they have compared it with themselves. Pure play Bitcoin exposure, I think strategy is also a pure play Bitcoin exposure. Bitcoin native operations, yeah, this is a new thing. Like 21 is planning to lend and go into financial services uh, by leveraging their Bitcoin, which currently strategy is not doing. So this point is valid, I think. Uh, Next point is existing debt. So currently 21 will not have existing debt, or when you compare with MSTR, MSTR has around, if I am not wrong, I think around some $8 billion in convertible bonds. Uh, let's check in their website what is the current debt which they have. So yeah, Currently, they have $8.2 billion of convertible debt. So, if you compare with strategy, 21 is pure play equity exposure as of now because convertible debt which they are planning to raise is not happened right now, and the convertible debt which will be a small portion when you compare it to strategy. Debt collateralization. So strategy is not using debt collateralization method like in point number 2, subject to release upon certain events. So this is not clear as of now, like what are they planning, like debt collateralization. So currently whatever debt strategy has raised, it is like uncollateralized, or any amount of Bitcoin have not been pegged to the debt, like it is a straight debt, unsecured debt. So 21 might plan to uh, like go in the market and pledge their Bitcoins and raise some debt. So they are hinting, like they are telling us like we will go into the market and pledge our Bitcoin and raise some debt. So they plan to do this insider ownership. So insider ownership, as we can see, Michael Saylor has, I think, a good amount of insider ownership, and a few guys like Cantor, Fitzgerald, and others. But in 21 Capital, it will be more like ownership will be more as compared to MicroStrategy. So their skin in the game will be more. So this gives them to, I mean, increase their Bitcoin rate of return or work more actively, which they claim, like they want to convey this point, like insider ownership. Currently, we have more insider ownership as compared to strategy. So due to this, we have more skin in the game, and due to this reason, we will be more efficient and more, I mean, more fast or something related to that. They will generate higher Bitcoin yield and purpose built KPIs. So this, I think, they have pointed out it from completely from their perspective, because strategy has also implemented some KPIs like Bitcoin NAV. Uh, like they have a list here on notes. So we have Bitcoin NAV, then we have Bitcoin dollar gain, Bitcoin yield. So these are few KPIs which have been formed by strategy, but currently, as of now, uh, 21 Capital has formed only two KPIs: Bitcoin per share BPS and BRR, Bitcoin rate of return. So I don't know why they have shown a full circle to them. 21 is potentially a superior vehicle for investors seeking capital efficient Bitcoin exposure. So this is according to them. Do your own research, and these are forward looking statements. So don't take this as a financial advice. So uh, this will be the transaction structure. So I think this will complicate. Uh, but let's try and see like what's happening, and is somebody trying to speak? uh I think BC Baradia, your mic is unmute. So, do you want to speak something? Okay, he has muted himself back. So let's focus on. So at announcement 1A. So where is 1A transaction? So 1A is here. Tether and Bitfinex. So they will give 31,500 Bitcoin at closing to new company in exchange for new company interests or new company shares. So Tether and Bitfinex are major shareholders. Like they will they will give Bitcoin to the new company, and in return they will receive uh, like some amount of cash, and they will again deploy this cash into a new company, which as we can see here, like 1A and 1B are here, and 2A at close 31,500 Bitcoin will be given to new company by Tether and Bitfinex to the new company. 2B. So at close, pipe like pipe investors will be uh, have like if they are successful to raise pipe, $171 million of cash will be raised uh, through SPAC. 2B, pipe investors contribute 200 million of cash and BTC to SPAC in exchange of SPAC shares. So this is a 2B transaction. 3A, SPAC merges with and into SPAC merger sub. So there is one more sub company which is here formed. Like 3A will be the transaction wherein SPAC will put all their investment in SPAC merger sub, and then 3B. 3B is SPAC shareholders will get Class A shares of 21 capital, including pipe investors receive 21 Class A shares in exchange for SPAC shares. What is 4A? So 4A is here. So whatever the Tether and Bitfinex have given, new company merges into new co-merger sub, like this goes into new co-merger sub. 4B, Tether and Bitfinex receives 21 Class A and B shares. So uh yeah, fifth transaction. So 21 capital will give convert investor contribute 350 million of cash, and 21 in exchange gives converts to convert investors. Sixth transaction is 21 capital purchases Bitcoin from step 1B. So whatever Bitcoin which Tether and Bitfinex uh, have committed to new co, they give it to 21 capital. Seventh step is SoftBank purchases 21 Class A and Class B shares from Tether. So here is this thing for purchase based on value of 10,500 BTC plus interest. If necessary, Tether sells additional BTC to 21 in exchange of 21 Class A and Class B shares. So this is like how transaction is going to be happened. So all in all, like Tether will be uh, one of the largest shareholders here, as you can see. Like Tether will contribute 18,710 bitcoins. Bitfinex will give 7,000 bitcoin. Tether on behalf of SoftBank will give 10,500 bitcoins. SoftBank might be giving them cash. So yeah, Bitcoin contributed in kind by investors will be 348. So there might be some HNIs who are willing to invest in 21 capital. So they will give in kind Bitcoin. So in kind meaning they will give their Bitcoin to 21 capital and 21 capital will issue shares to them. So instead of selling Bitcoin and then raising dollars and then then giving 21 capital dollar amounts raised from selling 348 Bitcoin and then receiving shares. Instead of doing all these thing, what these guys do, they just give 348 Bitcoin to 21 capital and get back shares. So yeah, this is what currently it looks interim funding de-SPAC. So what's happening after SPAC? SPAC cash interest 100 million, SPAC redemption 0% estimated fees and cash to balance. Pro forma ownership. So as you can see, Tether will be the largest holder of 46.6%. And they will have 51%, 51.7% ownership of voting rights. Bitfinex will be the uh, yeah, I mean significant holder of ownership 17.4%. Then comes SoftBank with 26.1%. Voting rights are direct. All of the voting rights will be with these big guys. So we as a retail or as pipe investors or SPAC shareholders won't get anything. Like we will get ownership, but we don't have any voting rights. So this is one of the concern, like minority shareholders are not getting any voting rights. So yeah, this raises principal conflict. So what is a principal conflict? Principal conflict is basically where majority versus minority conflicts happens. So in our case, like Tether, Bitfinex, and SoftBank can do whatever they want, uh, like without considering minorities' rights. They can do some shady stuff and promote their own interest instead of giving minority their rights. So this is one of the reason why we should be aware of these risks. So as far as public SPAC shareholders, 2.9%. So as far as CEP is considered, CEP will get 2.9% of ownership in this 21 capital newly formed company. So if we want to like do a valuation, so for example, if they raise, I have a tweet which is going into valuation and stuff. Maybe we can go into that into some time later. Uh, Offering term sheet, appendix, risk factors. So what are the risk factors? Risk related to public company, risk related to Bitcoin, business combination, risk related to business combination continued. So we can go into these risks. Yeah, I am not going into all the details because it will take time. Now I have one more tweet to show you guys. So until now, if you guys have any doubt, feel free to ask.
Hello, hi, and so I had one
Yeah,
question. Like,
yeah,
Tether is already into Bitcoin, and
yeah,
Bitfinex is also already into Bitcoin. So,
yeah.
do you have any like idea or knowledge why they are forming this new company? What different are they going to do in this company, which they exist present company they are not able to do it? If,
They will like do similar thing as of strategy. Like they will start acquiring more and more Bitcoin, which currently uh, Tether or Bitfinex they can't do at a pace which strategy is doing. So yeah, Bitcoin accumulation is basically what they are focusing right now, which I think, I mean, yeah, 21 Capital will be more efficient and more faster way for Tether, Bitfinex, and SoftBank to acquire more and more Bitcoin because they can leverage capital markets. They can issue debt and equity securities, like as I explained, like uh, they can issue.
but after they issue like they tap the capital market and debt market, will the like voting percentage remain as it is now, or it will change? Because if there is no voting rights for the new investors, like who are investing in debt or capital, they may not invest in those shares or debt like they do in MicroStrategy.
So these voting rights are before they go public, like SPAC shareholders and all, uh, like currently the guys which have Cantor equity partners like CEP shares, they won't have any voting rights. But after they list as a 21 capital and they become publicly listed, I think they will have to give some of their I mean, if they issue ATM and started selling their shares, if they have some good MNAV multiple of 2, 3, or 4, and copy strategy, then they might have to give voting rights because yeah. But I I mean I don't know because retail generally they are not focused of getting voting rights. But if any larger player wants to have an equity ownership, they can directly talk with the current management and get some voting rights. But as a retail individual or as a retail guy, general on a general speaking sense or a general note, retail is not focused into getting voting rights. That's why we have these different class of shares like class A share, class B share. So uh, by becoming publicly listed, I think they might have to. I don't know the what regulations from a regulatory point of view. I don't know, like they can continue uh, giving zero voting rights to new shareholders and continue raising equity and debt. Eventually, I think they will have to, I mean, give some of their voting rights similar to strategy. So, if I get back to strategy's example, uh, initially when a MicroStrategy pivoted to a Bitcoin treasury as a treasury reserve asset. At that point in time, Michael Saylor had majority voting rights. So in public, I mean, in these traditional markets, generally the promoters and these guys have majority voting rights, so they can, I mean, there are two ways to see this, like they can run things efficiently and as they want, and second thing is principal conflict, like majority investors will keep their interest first and ignore minorities' rights. So before strategy pivoted to Bitcoin, Michael Saylor had majority of voting rights. So because of that, he was able to uh, like overturn the whole business and get into Bitcoin. So in our previous sessions, I was explaining, like somebody asked a question like, why are other zombie companies or other companies are not adopting the Bitcoin as a treasury reserve asset? As we can see, like Microsoft had a voting, so they didn't. I mean, they didn't vote in favor of Bitcoin as a treasury reserve asset in their balance sheet. So Microsoft voting rights are dispersed. So even if Satya Nadella wants to convert or to transform or to pivot into Bitcoin treasury strategy, he can't. Or even Bill Gates can't because he doesn't have majority voting. So when firstly these publicly listed companies have to convince their board of directors. So when board of directors are convinced, then they have to do voting, and then they can do these things. So as far as Amol's question is concerned, uh, from a regulatory point of view, I think there will be a rule or a regulation wherein they have to give some of their voting rights to newly issued shareholders or newly issued equity. But before that, they like the structure is this, like they are not going to issue any voting right or give any voting right to SPAC shareholders as of now. So when they go public, we don't know what will happen. Yeah.
Okay. Okay.
Yeah. So, guys, any questions from you?
There was one thing mentioned in that presentation that it will be a Bitcoin denominated company or something like that. So will
Yeah.
it financials be in Bitcoin, like in Bitcoin terms, like assets,
Uh,
liabilities, and options?
Currently, they will be focusing on this thing like Bitcoin per share and BRR. So, these two things are which uh, they are looking to, I mean, to report. Uh, if I'm not wrong, xsi.com is their current website. Oh, this is not the current website. Let me xsi.money. Okay. So this is their current website. So they are showing Bitcoin per share live on their website. Yeah. So nothing more. Bitcoin per share is the key metric which will they show and total Bitcoin holdings. So you might have a question, why is 31,500 Bitcoin they have currently, like currently pipe has not been happened and SPAC has not been raised. Currently, this is only the Bitcoin contributed by Tether and Bitfinex and some folks. So yeah, after completion of uh, this whole process, we will get to 42,000 Bitcoins. So let's see what happens, and if SPAC goes, I mean SPAC is raised effectively and they are successful in it. So yeah, currently these are the only two metrics, BPS and BRR, which they are focusing. Yeah. So I think we are out of time. So we should stop here only. Jatin, you can stop